Hey guys, Mike here. So happy Friday and welcome to your 3-day weekend. Let me know in the comments if you have any plans with your family and stuff. So I know the kiddos are out Monday, and so hope you guys have a great weekend. Now I will say this. Boy, had an interesting day in the market. Nice rug pull at the end of the day, but obviously we had what happened. We'll get into this. Hot PPI came out. Terrible home builder hit the market today. But more importantly, there was other things happening that I'm going to go over. Just absolute craziness today, which was Friday. And then I'll also show you a video. You know, a lot of people always say, Mike, you always say the economy is not the market's not the economy, which I'll talk about in tomorrow in Saturday's video to show you that. But in one country, it's a little different, okay, and that's China, okay? So I'll show you a video at the end of this if you want to see it, why that one's different, okay? Why their economy is their market, kind of so to speak, okay? But I do want to start off with this. I said at the end of yesterday's video, if you are an SMCI, I never tell you what to do, but all I'm saying is, man, there's a saying for a reason. Never look a gift horse in the mouth, right? And you got people out there, and FOMO really exists. Like 5x in the stock in like a week or two, that wasn't enough for people. I saw so many times today this mess right here. Look at this stock. Finally got a rug pull on it, right? Down to like 25%. And you think, oh, you know, finally, yes. Oh, I can't believe it, right? Now, I understand it is coming into some support right there. So don't be surprised if this bounces. Don't be surprised at all if we're looking at it from a technical standpoint. But the point of this is I saw this too many times today. And what was it? I mean, look, first of all, look at this chart. Look at this. This is the daily. Look at that. Look at the weekly. That is straight up, people. That is not normal. That is a gift. That's what that is. But it's never enough for people. They always got a FOMO. Look at this person. I saw this like 7 times. Different people posting pictures of their accounts. This person ends up going in and buying a whole boatload of calls on SMCI. I think they're $1,000 calls or something. Down like $70,000 because they did zero expiration. Oh, and look at this. I'm going to zoom in on this for you. There's SMCI, $1,000 calls. Bought 49 of them, right? Down 72,000 when they posted this one. Of course, that money's gone, right? Because it was zero DTE. And again, I saw that on multiple people posting their Robinhood accounts down 50,000, 20,000, just like, and they're all stunned. Like, I can't believe it. And I'm like, look, you are what they call exit liquidity. One red flag is the chart, straight up. 2, the really big red flag was when I showed you BFA coming out after that massive run up and putting a buy rating on it with a 1,040 price target. That right there makes you exit liquidity. Doesn't mean it ain't going to bounce back. But the fact people were buying options still after that in massive amounts, what do you think is going to happen? I mean, that's not normal. That right there was a gift. It was a gift. Happy for everybody, but it's like, come on. You know, and that's what I said at the end of the video. I'm not going to tell you what to do. But boy, $1,000, 5x. You got to sit there and say, yeah, I mean, maybe I need to take a little off here, right? Maybe I need to take a little off and not do that. Again, I couldn't believe how many people were posting this stuff. And it's like, oh my goodness. And hopefully they get a bounce back. I mean, that guy's money's gone because he went in options. But, you know, a lot of people are buying the common. So maybe you get a bounce back now that you're coming to support. Finally had a little pullback. And understand, make sure you do yourself a favor. Go look at the float on this stock. And you understand why this is happening. Just go do that. It's a hint. What was the other thing happening today? I mean, showing this Friday. What'd I tell you? Nvidia showed some red yesterday. Showed a little weakness. Susie, what do we need here, guys? What do we talk about? We need price upgrades. It wasn't just Susie. Look at this. They had multiple, like 4 or 5. These companies came out and gave this thing price upgrades. Soon they saw red yesterday. Susie, Ben, Jimmy, Johnny, we need you. And come on, let's do this. I mean, they were literally sitting there going, come on, pump it up. We got earned. We can't let it fall. I mean, isn't that what you see with Nvidia? It's like, my God, anytime the thing goes red, they go, here we go. I didn't expect that many price upgrades. Thought one maybe. Nah, we got to go pump this thing. We can, God forbid, you let it fall at all before earnings, right? Cannot let that happen. And when you look at the chart, you can see, I mean, right there, starting on Monday, it just kind of got this level right here, right around 740, where it's just sitting there waiting to explode. I mean, either explode higher or end up selling back down, but that's become more of a resistance, even though you keep putting these price upgrades on this stock. And a lot of people will say, it's going to be Nvidia earnings that's going to be the catalyst for what? A bigger move up or a big move down? Because again, this is the AI king. This is the one actually has showed they can monetize AI, unlike a lot of companies, right? They've showed it. And so we'll see if they're going to keep this party train going. Let me know what you think about that in the comments and what your thoughts are. Now, the data that came out as far as economic data was, it wasn't good, right? PPI came out hotter. Shocker there, 0.3 versus 0.1 estimate. Core PPI 0.5% versus 0.1% estimate for month over month, you can see right there. And then, of course, as far as the year over year, 0.9% versus 0.6%. And then core PPI 0.2% versus plus 0.16%, as you can see. And it's kind of a blip on that little chart there, right? But then the housing data, oh my goodness. January housing starts minus 15% month over month. They were expecting it to be flat, right? And then, of course, previous was 3.3 in the positive. Building permits down 1.5% versus the positive 1.3. And so that was just a mess. You can see that chart is going in the wrong direction, which what's that mean? That means less inventory, right? So the inventory is not going to be going up. So if you want prices to drop, it's going to be hard with inventory, okay? And that leads me to earnings, right? We finally got through the majority of earnings, and this is what you need to know about earnings. And guys, before we continue, if you could hit that like button for me, I sure would appreciate it. It helps people find this video and everything. And also, if you like the content, think about subscribing, guys. And that's this right here. So this is going to show you the sectors, right? Which one's actually beating earnings and which one is not beating earnings. And the number one, actually, it might surprise you, believe it or not. But as I zoom into this down here, and you can see it on the bars as well, it kind of gives it away. But so you can see the numbers down here. Healthcare is number one, right? 91% above. Guess we shouldn't be too surprised about that. Communication service, 79%. Tech, 71%. Industrial, 67%. Not bad, right? Financials, 67%. S&P 500 all the way around, 65%. Real estate, now we're going to start getting iffy, right? 60%. Materials, 58%. And then you start to go, consumer discretionary, 50-50 basically. You're looking at energy sitting there below 45%, only beating 55% or below. Consumer staples. This is the stocks that definitely been getting hit. 65% below expectation. Has a lot to do with us, right? Utilities, just disastrous. 71%. Right. So really, the things that are really hard up against the dollar or any kind of yields and interest rates, that's the ones that are hurting the most when it comes to earnings, right? And so that's why you see the money going where it is going. Now, would there be a rotation? That's what we got to find out. And when you look at a couple stocks, most of these stocks will go over on Monday before it set up the week and everything. But you can see some of them are getting interesting, right? You got Google falling out of this pattern right here, dropping below and closing below its 50 moving average. Usually it bounces, but it dropped below it. And now the next line, if it continues to sell off, look for that 100 moving average, right? So start to see if this starts to show more weakness to it, because usually you'll get a bounce at the 100 if it does. But you're seeing a lot of these rising wedge patterns, right? Apple's the longest rising wedge in history. But you can see right here, this one right here, once again, that rising wedge is saving it. That trend line, again, it's been in place for over a year. It's sitting right on it. It's closed below its 200. And so we need to see if this is going to hold up or not. And the reason why that's important, obviously it has a big weight in all of these ETFs, but also what are you going to see? If that drops below and goes down to that level right there and breaks it, that's when you're going to start seeing lower highs, which you've already seen, but lower and lows. You'll get a new lower and low if it drops down below that level right there. And that's what a lot of people are going to be watching out for sure. Again, if that happens, then we'll see where we're going to go from there, and we'll start to pull out the fibs. But understand, keep things in perspective here, guys. It's not a fear-mongering channel. The majority of stocks are above the 200 moving average, okay? And this is why I go over this every day, Monday through Friday. When I issue this out every morning, these morning news briefs, you come down, you get sentiment, right, which you got to pay attention to, and also where is the moving averages at. Now, what I like to look at, obviously, are we in extreme greed? We were in extreme greed on both the fear and greed indexes I like to follow. And then there's your NASDAQ 100, S&P 500, Russell 2000. You can see anywhere from 60 to 77% are above the 200 moving average, okay? That is a bull market. That is not a bear market. That is an uptrending market, okay? Whatever name you want to give it, feel free to give it. And as long as liquidity, as you see down there, is ample, all right, it will continue to move up. Now, that don't mean there's not going to be pullbacks, 2%, 5%, whatever it is. Every day you're seeing what? CPI dropped just like a hot rock, recovered like crazy. Okay, that's what happens in uptrending markets. It's that simple. That's why I like to do the overview and the picture of it. Okay, so that's where we're at. Doesn't mean we're not going to get weakness and sell off and everything. Always have your dry powder ready. Always have your plan ready. What stocks you're going to buy and stuff. Now, speaking of stocks, I get this question all the time. I get emails, DMs, and I appreciate them all, by the way. Understand, in this country, the majority of our wealth is in the stock market. It's not in the real estate market. It's not in anything else. It's in the stock market, okay? That's why when stock markets bottom, when do they bottom during crashes? When things are at their worst. The unemployment rate is still going up. Everything looks like it's going to end. It's all over for us. And the stock market starts raging, okay? We've seen it multiple times, right? But in other countries, you'll see in tomorrow's video, you see the same thing happening, okay? Now, what country doesn't have the majority of their money in the stock market? It is China. China has the majority of their money, like 70%, in real estate. You got to understand this and listen to this real quick. This is not me.
That when you have a scenario like Evergrande and Country Garden together have $500 billion worth of debt. Two companies have $500 billion. Every single property developer in China that's public or listed is in default, bankruptcy today. When the Chinese miracle, and I put the miracle in quotes, when the Chinese miracle was running its course, it was all real estate focused. Let's say all. The substantial majority of Chinese GDP growth was real estate and the concentric circles that surround real estate. And now you're having a reversal after an unregulated and unabated climb in real estate. Now you're seeing a real estate collapse. So this is just like the U.S. financial crisis on steroids. They have 3.5 times more banking leverage than we did going into the crisis. And they've only been at this banking thing for a couple of decades, Brian. China is going to get much worse, no matter how much their regulators say we're going to protect individuals from malicious short selling. Imagine regulators blaming a 15-year swoon on their stock market on short sellers. It's just, it's hilarious.
And so does this mean their stocks in the stock market won't go up? Sure, you're going to have your pops and drops you've seen. I think I've showed you before what I'm looking at. Like when the Hang Seng breaks this line, then sure, no problem. I don't mind investing at that point in time. And I'm saying invest, I mean trading it. That's for sure. You're going to have your pops and drops. You've seen it in Baba and all this other stuff. PDD is funny because I actually looked at that one and I thought it was a Chinese company. But when I looked at it, it's founded by Chinese founders, but they say they're like incorporated in Ireland or something. I don't know. I don't know much about that company. When I saw it, but that's the one doing pretty well, right? So it doesn't mean, they're not going to end up popping and doing all this crazy mess because they keep coming out with what? Different ways to try to stabilize this whole thing. But their economy, look at us in 08, right? Think about that. We have like 30% of our wealth in, 08 in real estate, right? You saw a bad thing it's got. Over there, you got people got money tied up in houses that aren't even built, and they can't get the money back. And so that's why they put all their fortune and built all those ghost towns and just built houses upon houses that they didn't need. And so you got people, unlike the stock market, like here and in most countries, you go like this. If I have a stock, beep, oh, I just sold it. A house, you can't go, beep, I just sold it. You can't do that, right? Especially the house ain't even built yet. I mean, what are you going to sell? Space? I mean, it's crazy. And you see all those talking about the builders and everything else. So it's one of those things, I don't think we've ever seen anything like it because 08 it was nothing like that. I don't know how you fix that. Again, can the stocks eventually rebound? Sure, because what happens is they're beaten so far down and the valuations get so low that big money finally starts to roll back in and starts to push them back up. But you just got to have your trend lines, your alert set, and resistance lines. There's certain, you can see it on these charts of when they break out. But that's the reason why it's taken so long for stocks to sit there and try to recover over there, because people realize, man, that economy is a mess, right? That economy is a mess. And so, and it's a problem you just can't snap your fingers because they're throwing everything at the wall and see what sticks, right? The only thing saving them, they own their banking system. It's a communist country, so they own it. And I've listened to people and follow people from China like, no, this housing market's a mess. And so, again, we'll see how it goes, but I want to at least let you see that video and hear it and see like, wow, that's pretty bad. And that's why I don't invest in Chinese stocks. I'll trade them of different levels and stuff, but no, I'm not investing in them. Do what you want to do. But I just want to make that very clear. So China is the only country I know where I can say, their economy definitely affects their stock market a lot more than others for a reason. So anyway, tomorrow I'll come out with a video, obviously answering all your questions in the comments. Sunday, I got a video coming out for you, which I rarely do, but I think it's important to watch it to get some ideas about stocks maybe you want to invest in and stuff. And then Monday we'll do the video to set up the week. Okay, because remember, 3-day weekend. Enjoy it, guys. Appreciate you watching. Hit that like and subscribe button on your way out. We'll see if they'll pump Nvidia some more next week. Hopefully you guys in SMCI, it goes back up for you, I hope. So have a good weekend, and I'll see you